This is the Business Stuff Podcast. This is where I will share the lessons I've learned from advising thousands of businesses over almost 30 years. Each episode will give you practical insight to allow you to learn from other people's mistakes. I'll be pulling in experts from our team and the world of business, and together we'll make sure your business is giving you what you want. My name is Martin, and this is the Business Stuff Podcast. Hi, it's Martin from the Accelerator team, and today I'm here with Shaun Fooy. Hi Shaun, how are you doing?
Hi, nice to meet you.
Shaun, you're a senior manager at the British Business Bank.
Yes, I am.
North East
and Tees Valley.
And Tees Valley,
Part of a network team, yeah.
I suppose just tell us who you are first and very briefly what you do.
Yeah, so British Business Bank is UK government owned. We're funded by the Treasury, and the Business Secretary is our shareholder. So we're not a bank in the sense of a high street bank like a Barclays, Lloyds, or whatever it might be. Our role really is to support small businesses on their funding journey. And make sure they're fully informed of their funding options. And I look after the North East and Tees Valley and have done so for the last 5 years.
Okay. So you said that you don't lend money directly, you're not a bank in that sense, you're a high street bank. Where would people know you from? What would they have seen that was that you were involved in?
We don't lend or indeed invest in business directly because we run debt and equity programs. Yeah. It's always delivered by our delivery partners, and we have over 200 across the UK. So we work with the major high street banks, and we work with a lot of other smaller funders like Funding Circle and others. We're probably most famous for the COVID loan programs that brought us to prominence during the pandemic. The Civils and the Bounce Back programs were designed by ourselves, and the Successor RLS program. But we run a whole host of programs, including the Startup Loans program and a number of regional funds programs as well.
Okay, so people a lot of people during those periods will have seen your name around, but not quite connected.
Yes, they will not,
because they'll have gone to Lloyds on that West.
So in the case of the COVID programs in RLS, we're providing the guarantee that sits behind that underpins that program. That only comes into play if that business who's secured the funding from a Lloyds or a Barclays, or whatever it might be, gets into financial trouble, and the guarantee has to be realised.
Okay, so going forward then, obviously that's what's been behind you, I suppose. You've touched on a couple of things there, but you mentioned startup, and I know there's changes coming in the way some of the loans are delivered. Maybe not getting that detail yet, but what do people in business need to know about what you do? So if someone says, phase jib, I'm going to get in touch.
Yeah, so I mean, to put it into context, the bank's got about 12 billion out in the market, and there's around 80 odd billion in guarantees that support businesses. If you pick on there's a whole host of programs, but if we pick on one or two in particular, if you look at the Startup Loans program, that's to support a business trying to get started up, anything from very early stage up to 3 years of age, maximum loan of up to 25 grand, personal loan for business purposes, set rate of 6% fixed, 5-year term. But people can come back more than once, so some people may not borrow the full 25 grand, they might borrow 10 grand, and as long as the business doesn't go beyond 5 years in age, they can come back again and borrow the difference between the 10,001 up to the 25. Because it's a personal loan, you can have up to 4 loans. So you could, if you had 4 directors in the business or four partners, you could have 4 loans basically.
No, that's it, right.
And sometimes I think the startup loan causes problems because people think, I have to be very early stage, I have to be pre-start.
To be fair, by 3 years you could be well underway.
You could be well underway. So you could come to us at you're 2.5 years old and still get a startup loan.
Is there a size threshold for that then?
There's no size threshold. It's not.
So you could be doing pretty well at 2.5 year in.
You could be perhaps a few £1 million or something like that.
You just think, well, we need to renovate the office or buy a van. Are there restrictions on what you can do with the money then?
No, I mean there are certain sectors we work with. So if somebody's involved in perhaps the defence industry or something like that, making weapons or something of that nature, or if you're involved in certain others like gaming, things like that, then it's always best to check. You go onto the bank's site or the startup loan site and just see if your sector's a sector that we can't work with. Excluded.
That's normally because there's other government funding, or why would we fund defence? That's what the MOD do, presumably.
Yeah, so it just depends, but more often not, it'll be a business that could be in retail, could be in leisure, it could be manufacturing, something of that nature, could be a high tech, tech business of some description, life sciences or something like that, and they can secure a loan.
And does this come via you, or is that also delivered via delivery partners?
We work with a whole host of delivery partners, so the main one in the Northeast is Business Enterprise Fund. But if you go onto the bank's website, it may be, for example, you're ex-military and you want to start a communications business, for example. We work with the Ex-Forces Association, for example. So there you've got ex-military talking to ex-military, and sometimes...
All I'm thinking now is spy. Sorry, ex-military communications.
Yeah, communication can be a variety. I mean, I met a business a few years ago, and they were working with a lot of construction companies installing mobile data and mobile systems so they could operate remotely on site, from the site office with their laptops and so on and so forth. Yeah.
Are there any obvious... Because I think a lot of people in business in probably the last 15 years, to be fair, since 2008 on, have heard all of the banks, sorry banks, but kind of like, we're open for business, and you go, can I have some money? We don't, no, you actually need money, so we're not going to lend you any money.
So we're different in the sense that, we're not a high street bank, as I said. Our job is to try and get the programs out, but we're working with multiple partners, not just the major banks. So COVID taught me one thing during the pandemic, that there was over 400 lenders in the UK that wanted to join our COVID loan programs.
Yeah.
So, but people probably can only name perhaps half a dozen lenders. Once you get beyond the high street, then you start to struggle. By the same token, we're also running a lot of equity programs as well. We work with angel groups, we work with venture capital firms, because particularly a lot of younger entrepreneurs, and I think this is probably where you get a bit of a split with equity. If you're a family-owned business that's been handed down during the generations, you're probably not going to be interested in equity. It's not for you.
Is it, before you get into the equity comment, is it worth explaining? Because some of our people might have only been in business 6 months. They think, what's he on about equity? What does that mean?
So equity may be where you have your business is valued. That business has a certain level of valuation. You're trying to grow the business. You perhaps don't have the ability to borrow because it's very early stage, you might still be loss making, but actually there's still a value attached to that business and there's a future value. You could potentially sell a stake in your business to an investor. They then inject capital in that, and with that capital you can then use that for growth purposes.
Most people would know this as Dragon's Den.
Yeah, I mean, Dragon's Den's done for television.
I was going to say, but without the high tense drama.
I mean, typically if it's an angel investment, an angel shouldn't be wanting to take more than, say, 25% of your business at any one time. It's not just about the money. You should be working with an angel who you feel you can get along with, that can bring a contact book. If you're trying to, you've developed a food product, for example, and you're trying to get into Waitrose, or you're trying to get into the other big supermarkets like Sainsbury's, Tesco's, whatever, that they can unlock doors for you as well. Because you're going to have an ongoing relationship with that investor for a period of time.
So who would be the angel in your scenarios then? Again, are these partners you work with?
We are partners we work with, have around 13 angel groups to work with, where we've created a joint fund through the Angel program that we operate. By the same token, there is a whole host of other angel groups we support and work with, either sponsoring them or helping with their pitch events or their investment readiness programs as well.
So we've covered two of the main areas here. And so startups up to 25 grand, 3 years of trade, up to 3 years of trade. Sounds fairly flexible on who can apply.
Yeah,
a couple of restrictions, but fairly flexible. It is personal debt. What if it's a company? Is it still a PG?
It's still it's still personal debt.
So it is always
in the name
of
the individuals. Yeah.
So even if it's a company with 4 shareholders and directors, it's the 4 individuals that borrow, and it's up to them to put the money into the company. Or I presume that'll be a stipulation.
That's a stipulation. They can't go and buy a car with it or something, and or go on holiday to, I don't know, Acapulco or something.
Acapulco, that's going back, isn't it?
I'm sure my age.
Ronnie Biggs comes to mind.
Yeah. I think he.
Phil Collins.
He went to Buenos Aires, I think.
Is it Phil Collins?
Yes.
Going local down in
Acapulco.
Sorry, yes, we are getting on. So you mentioned the equity. What else is going on then? What if I need 30 grand? Where do I go?
Yeah, I mean, I think I probably I'd highlight our own regional funds program that operates. So currently we operate just in Tees Valley. It's called Northern Powers Investment Fund, NPIF program, and that's delivered again through delivery partners. So that program runs till the end of the year. We have FW Capital that do the debt.
I presume you're Tees Valley, but there will be other providers.
I'll come to that. So there's FW do the debt. There's BF, our Business Enterprise Fund, who are not only running the Startup Loans Programme, but run a small loan programme for us, 25 grand to 100. And there's an equity programme that Mercy run as well for us, up to 2 million. There is going to be successor programmes to that, not just for Tees Valley, but for the rest of the North East and the rest of the Powerhouse region, the North West, Yorkshire, Humberside, which will launch between January and March next year. We haven't yet got through the tendering process to announce who the fund managers will be. That will be done in due course. It's a public tendering process we're involved in at the moment. But we have 3 programmes that will operate: small loan between 25 and 100,000, a debt programme to £2 million, and an equity programme to 5 million. So you will see potentially possibly some new fund managers coming into the region, or existing ones picking up new programs. It depends on who's successful in the tender.
So, and I presume if you're over 5 million, you need to just go to other channels.
Well, if it's equity and it's over £5 million, then you're probably already talking to.
It's a different conversation.
Larger VCs in London or
that's
overseas.
Not someone trying to buy a couple of vans for a fleet, is it?
Or you're working with a private equity house or something like that. And some businesses do go all the way.
We kind of jumped in and probably by fault there, Shaun, but what proportion of businesses normally use external funds then?
There's only probably around half. It's a bit of a misnomer that every business borrows or every business has some form of external funding. They don't. A lot just self-fund, the bootstrap. That could be from their own resources as the owners of the business, or it could be from family members or friends. And they will achieve their goals that they set for themselves with their business plan and their objectives, but it'll take them longer to get to that point than if you employed external funding.
Because external funding can act as like a catalyst, a leverage.
It can. It's a real boost for the business, but it has to be right and it has to be appropriate. And ultimately, a business owner doesn't want the funding that they get for the business. They want what it does for that business. So they don't want a loan. They want the money to actually buy some vans,
they want the office
buy
kit
a piece of
shop
kit, buy some premises or lease some premises and grow the business.
What level of, and obviously the different funds will have different levels of requirements. One thing that always makes any business shudder is, got to come up with a cash flow forecast.
Yeah, so you'll always, you work with a delivery partner, so they will specify what they're looking for. Very broad brush, because my background is banking, 32 years in business and commercial banking. The typical sort of things that most funders would ask for is accounts from either 3 years accounts or accounts from inception of the business. They may well want some sort of forecast, but it's best to ask exactly what they want. Do they want a cash flow forecast? Do they want a projected profit and loss account?
Because they're not all, there isn't just one standard.
There's not one standard thing. They'll probably want to have information on the owners of the business, the management team. That's equally as important when you're making a lending or investment decision as the numbers. Because you've got to understand who does what in the business. So who are the major shareholders? Are they involved in the business? What's the background of the individuals involved? What's the dynamic? Who is the chief executive, if there is such a thing, or the MD? Who is the chief operations officer? What's their background? If there's gaps in the management team, because if it's a new business, there probably will be. How are they going to address that? And that can often sway the decision as to whether or not an early stage business.
Some of that might be again making people shiver, going, "Wow, that sounds complex."
It's not really.
It doesn't have to be.
It doesn't. It can just be
smaller end.
It's simple as a CV or something like that. It's like applying for a job.
Because we've had clients who, we had someone probably not that long ago. I remember now, with a lady in business who really did just need a bit of breathing space till something came through, and she, I think, went through the startup fund. start to finish, I think it was like 6 weeks max, and that was there was a bit of like deliberation about what to go for. It wasn't an onerous.
Most of the processes aren't. I think what I always say to understand at the outset, when whichever funder you're talking to, and it's through one of our programs, exactly what they want in terms of financial information. When I was a relationship manager, and I've worked for 3 of the major banks in the UK, the worst thing you can do is drip feed me information, or I've asked for 3 years accounts and you give me 2, or I've asked for 3 years forecast and I'll get 1. And I'm chasing you. I used to say it's quite nice if you can.
Do you want this money or not?
Yeah, and most funders don't have time to chase you. They're not your mum. It's not their job to wipe your nose for you. Try and present them, and I used to say, give it to them in a box with a little red bow on. That all the information, you check with them what do you actually want. They tell you, you go away and get it and deliver it to them.
Give them that.
Yeah,
not
give
something
them that.
Like that, not nearly that.
Now, if they come back and say, I need to clarify this, or could I ask that piece of this information? Fair enough. But if you only give them half of what they wanted, they can't make a valid decision. It's just like if you're in business and you're going out to quote for something and somebody only lets you quote for half the job, you can't realistically fulfill that contract, do that job, give you a realistic quote. You can't do anything. So it's the same on the other side of it. Or if you went to buy a car and someone said, I'll only let you see half the car, you wouldn't buy the car. So it's the same principle.
But also to stress, it's not, so when you say, we need, because to be fair, you said quite a lot of things you might want to explore with the, but we don't need a business plan to the penny for the next 10 years.
It's not going to be like that. I mean, it's very difficult. Who can predict where we will be in 5 years' time or 10 years' time? But always ask the funder exactly what they want and provide that information. And
that's good advice for anyone trying to borrow money.
It is, and always work with your advisors as well. So work with the likes of yourselves at Robson Laidler, involve them in the process. What I found during COVID is some people tried to go off and just get the loan themselves because they were panicking about COVID, and they were panicking about their business falling through the hole that was the pandemic. But they didn't. I often said to them, "Have you talked to your advisor?" No. Why? They're there. They're happy to help. They want to assist. You're probably gonna have to talk to them remotely because you can't go and see them physically. But they're there to support you, and they want to see you through this crisis and out the other side. And I did talk to one business, and he said, I need to borrow £500 million. I said, where's that number come from? Oh, well, I've sort of plucked it out of the air. And I said, but do you really know, is that enough? Is that too much?
I mean, at $500,000, you need to be doing a proper cash flow.
As it was, I spoke to him.
20 grand for a van at a startup.
Yeah, it's a different thing.
I need a van, it's going to cost us 20 grand.
Yeah, it's horses for courses. A few months later, I spoke to him, and actually his real ask was a couple of £100. So he would have gone in and asked for too much. He might have got it and actually really over borrowed.
Which once you've got it, it's like you've paid the arrangement fee, you're paying interest,
and you've got the money, and it's too much for the business to. You've saddled the money with the business with all that debt when you didn't need to do that.
We see a lot of startups come in and they go, this is a real life example from not that long ago. There's 3 of us and we've all got this much money, we're going to put it in. I was like, all right, we've worked out how long that money needs to be in for, and when the money's coming back. All here's cash flow. All right, you haven't got any VAT in your cash flow. Well, why would we put that in? Like, we just collect it and pay it out. It's like, yeah, but it still changes the amount of cash you've got in the bank.
Yes.
And I'm a tax guy, not an accountant. And like, all right, okay, we'll do that. And even we, on a rudimentary basis, worked out they didn't need to put anywhere near as much in. Because I was like, but you're going to start earning like pretty quickly.
Yes.
Money's going to come in. Yeah, but we didn't want to, I was like,
hold that cash back.
Yeah,
and
but
if it doesn't work out, then you can put it in.
Don't blast the money. Just have it there in case you need to. But also don't just put it all in. Because another weird thing is that I said, and how should we pay ourselves salaries? I was like, well, don't put money in just to provide a salary. Just don't put it in.
Yeah, just hold that.
If you need £2,000 a month.
Yeah,
keep £2,000 a month out.
Live on that money.
Until the business is standing up and
don't take anything out of the business and for 6 months, 12 months, whatever.
Yeah, so again, it's all of these little things. I think people can sometimes be too close to the detail, which is why I think shameless plug, but yeah, speak to you said it, not me. Speak to your advisor.
Yeah, you must speak to your advisor. That's their job. I don't know of many business owners who are multi-skilled to the extent that they're a great FD, they're a great salesperson, they're a great management person, a great ops
product
person,
design,
they do everything. And they sweep the floor as they go at the same time.
And they're also great at cash flow planning.
You need support, you need help. If it's available, use it.
What red flags do you look at? Probably on the smaller end, because again, the startup sounded quite flexible. Is there anything where you go, you're never going to get any money?
There'll be certain sectors that there'll be exceptions, so it's always best to look on the bank's website. Equally, if somebody has got a bad credit record, they're not going to get a startup loan. So if they've had,
it doesn't matter that it's taxpayer funding, it's just
defaults, judgments.
If you're a bad loan, you're a bad loan.
Yeah, if it's one default and you talk to the funder and you explain the circumstances and it's because something happened, perhaps you've had a personal issue in your life,
British Gas kept chasing their old address or something.
Personal issue in your life or something, then that's fine, and they may well work with you to support you. I can't say for definite, but what I can say is if you've got lots of skeletons in your closet and you're sort of wasting your own time as well as the funder's time, because they will find out, they will do their credit checks and they will do their credit searches, and that information will come to light. So it's best to be upfront at the outset, and then you're not wasting anyone's time, and you can then move on and they can move on.
Are there any things that you definitely don't lend money for? You've said, for lending money to a business, it's not so you can have a holiday.
Yeah. So
what other things are on there?
So things like, if you're involved in certain industries, so things like maybe the defence sector, that's something that the bank, if you're going to be making guns or something.
But what about let's just assume it's a factory that makes widgets. Is there still something within that where you kind of go,
that's
can you use it to refinance, for instance?
With startup loan, you could potentially, if you could look at that, as long as you're within the parameters of 3 years or less. 6% fixed at the moment is a good rate, because obviously we're basis at the moment. But obviously a couple of years ago, 6% fixed didn't seem so attractive when base was substantially lower.
6% is not a bad shout.
It's horses for courses at the moment. Really, it's where it is in the market.
It's certainly probably cheaper than overdraft interest and charges, isn't it?
Yeah, and you should always, when people are borrowing money, one of the things I would always say is, you hear the interest rate, actually look at the monthly repayment, look at the fees and the charges. Are there any break costs on a facility? Whoever that's with, understand the ins and outs of the facility. Don't get focused on the rate too
facility,
much. Again, talk to your advisor if you're unsure about anything.
Because to be fair, Shaun, one of the things people focus on, like you say, is the 6%. Oh, there's an arrangement fee. Yeah, but the thing you're doing should make you more money than the interest.
That's the whole point of it, isn't it? There's no arrangement fee with a startup loan, which again, is attractive to people.
Yeah.
And people say, well, why does the bank do that? And why? I've been asked a lot, why isn't the interest rate going up? Well, it's our own money, it's government cash. We don't have to, it's not like a bank that's borrowed in the market, or it's
subject to
taking
LIBOR,
a deposit from Martin and it's lent it to Shaun at a different rate to the rate it's paid to Martin. We're not having to make a turn on that money. We're not. All we're trying to do is encourage businesses to start up, to grow and develop. Or if they have started up, consider taking on external funding as an option to expand that business.
Can you use any of these things for things like management buyouts to buy out old shareholder?
By and large, some of the programs will preclude buyouts because there may be some clauses in there around what the government cash can be used for. One of the challenges, for example, with some of the current regional funds programs, there was an element of European money involved in them. They precluded buyouts. They would fund the growth on day one. So if somebody wanted to have some cash flow funding to support that business, but they wouldn't fund the buyout. But it's always worth speaking to the delivery partner. And some of those delivery partners will have other programs that they operate independently of us, and they may be able to support that transaction. It's have that conversation.
What are people borrowing for at the moment? What's the most innovative use of money that you've seen recently?
I think what we're seeing at the moment is a slowdown in the market. People are concerned about the state of the economy, the current rising interest rates. and the media have a part to play in that, because there was quite a lot of negative press around the
self-perpetuating, isn't it?
It's self-perpetuating. It
talked ourselves into a downward spiral.
So when you talk to funders, there are a lot of deals that are in the pipeline, but business owners are reticent about taking that deal forward. Or if more often than not, it is for growth. So they're tempering that growth expectation down. They might still do the project, but at a lower level. So they don't need the same level of funding. Or alternatively, that they do struggle to find staff. That is still a massive issue. So therefore,
if you buy a van, you've got no one to drive it.
Yeah, that's the thing. Or you really need you're a graphic design company and you need a new head designer, or you need and 2 additional designers, and you can't find them. Or if you can find them, you're going to have to pay over the odds to secure their services. That there's a significant cost involved to the business in doing that. If you're paying high salaries to people to bring them into the firm,
which all does just slow people down a bit, doesn't it? Makes it a bit harder to roll the plan out, doesn't it?
Most business owners don't want to overextend themselves at the moment. If you look at the equity market, probably what you're seeing is most of the deals are follow-on deals, so they've already had funding from their funder, and they're getting additional funding support, stage 2 and 3. It's becoming more challenging for that business to get that first bit of funding and get on the funding ladder. I heard of a business down in the southwest, come out of Falmouth University, had Rolls-Royce and a number of other good blue chip clients, and it was struggling to find its last 100 grand for its growth aspirations. It's because some investors are reticent about taking on new deals at the moment, and taking on brand new companies that they don't have an existing relationship with. We saw it during COVID, and we're seeing it a little bit again now. And they'd rather work with an existing business that they know very well. They've built a track record of a relationship with those owners. They're comfortable with them, and so they'd rather just work with them. I'm not saying they won't still do the odd deal, but they've only got to find out.
Confidence is a fickle thing, isn't it? It's very easy to shatter the confidence in the market.
And
we're definitely in a phase at the moment where
we are, and the general trend on bank base rate is upwards. But if you look, there's quite a lot of blog posts going around. If you look generally, base generally at 5-6% is probably where it's been for the last 30-40 years on average.
It's easy to say that, but a lot of people don't remember.
But they don't, 2008. And that's the challenge.
So you've got the whole new raft of people new to the working world kind of go, what's this? It's nuts. It's 10 times what we've been used to.
And
it's not really.
You've got very young entrepreneurs who are in their 20s and 30s, or sometimes perhaps slightly older, perhaps early 40s, and they've never ever seen a base rate environment where base is between 5 and 6%.
I was speaking to someone yesterday, and they said, it's so annoying, we've been battling away for years, and now I'm actually making some money. It just so happens we're at the highest tax rate and the highest borrowing rate. How frustrating. And I could see where he was coming from, but also, like you say, that generationally, this is nothing new at all.
It's nothing new at all, because base at sort of less than 0.5% was actually the abnormal. This is the normal.
It was really weird.
But I'm an economist by background, and one of the challenges that I think we have with the economy at the moment is if you have slow growth, if you have inflation and a government or a Bank of England trying to bring inflation under control, you would normally have rising unemployment. We don't. We actually have upwards of full employment. There are more jobs than there are people to fill those roles. So economics is on its head a little bit, which is confusing and difficult. And there are different factors at play around the jobs market. Some of it relates to COVID, people exiting the labour force early. They quite liked being at home.
Because a lot of people went.
They were furloughed.
I'm just going to pack in. What the heck?
They were in their late 40s, early 50s, and they just decided not to continue. Some people obviously went home during COVID. They come from the European Union. They haven't come back, and obviously the rules have changed now in terms of working in the UK.
You've got to apply like everyone else now, haven't you?
You have to apply like everyone else, and you can't. And if there's a job available somewhere in Europe, well, you'll take that job because it's easier. If they're comparable in terms of salary and
if you're French, you're going to go to Germany because it's easier.
It's easy. So you've got a lot of factors at play, and also you have some people that are suffering illness related to COVID, long COVID, and other
because sickness levels are going up and up, but we're quite unusual in that, I think.
Yes,
in the UK,
and I think that's a challenge for the economy. So, and there are also some people that are listed as unemployed, but have very low skill base, and they need a lot of help to be upskilled. They need a lot of support in terms of confidence to interview. Doesn't say that they can't fulfil a role, but they're a long way from being. They're not ready to take off the shelf, if you like,
job ready
into a job. They're not job ready at this point, and it'll take quite a period of time to support them to get a role. So it is a challenge.
It's probably for another podcast, but I am a bit concerned that there's a raft of people who left school, university into an unusual market during lockdown.
Yes.
And if they've now got to turn up somewhere and be interviewed, I think that's going to take years to ripple out and
yeah, I think it's quite difficult because a lot of I work remotely, I work from home in Gateshead, but you do have a lot of younger individuals who joined the workforce. They joined a firm remotely. They have only just now started to meet their colleagues.
Some never have met their colleagues.
Some have never met their colleagues.
Which I think is crazy, but yeah.
And I think when you come into a role, you really do need to be in that building, that office, to bounce off colleagues, to gain knowledge.
Yeah.
It's much harder if you've got to phone someone up or Teams call them or Zoom call them.
It's not a popular opinion that way. Some people have been lambasted for saying such a thing, but I agree with you.
I think you need to be there at least some of the time. This drift towards everybody working from home, I think there needs to be balance drawn. I can't physically go into an office every day because my head office in Sheffield and another office in London, it's a bit too far to go, just sitting at a desk all day. But I think if you can go into an office, and if you're
also not doing everything remotely. You're sitting here with me now. You meet.
I'm out and about.
You meet the banks, the lenders, the providers.
So I go out and about, and that's my role. And I'm engaging with any sort of stakeholders in the Northeast that work with small businesses, whether that be in the private or the public.
You're doing that either way, aren't you?
Yeah.
What we normally finish, Shaun, if it's okay with you, with a question along the lines of what is the thing that people keep getting wrong about your specialist area?
I think sometimes they think I have a direct influence over the lender that they've gone to or the funder they've gone to.
I spoke to Shaun and he said you would do this kind of thing.
And try and override that decision, and I can't do that.
But ignoring what they mistake about you though, what like lending in general, what do people keep getting? What are they just not getting here?
I think sometimes what they do is they don't borrow. If it's pure lending, they don't borrow the right amount. If it's equity, they don't seek the right level of investment. They'll often go on the cautious side because they're worried about how much external money they're putting into the business.
And how much control they're giving away if it's equity.
If it's equity they're giving away. Actually, you should seek the amount that the business really needs. You should seek the level of funding that the business really needs, cost it out, work with your advisor, because there's no point borrowing too little, because that means you're not achieving your growth plans.
Because you just got to go back again and
always bear in mind that if you're selling a stake in your business and you sell 25%, you still control 75%, or hopefully you still control 75%. You're still the predominant shareholder in that business, and you're bringing expertise in. You're bringing knowledge. You should be. People you can work with.
We should never just give equity away just for money.
No, it should be, can you work with these people? If you don't think you can, you should walk away from the deal and go and find someone else.
We have a lot of clients who come in and go, I'm going into business with this guy. And say, what are they bringing? They're going to put the money in.
Yeah.
Well, they should get interest on money. They shouldn't get shares.
Yes.
If you're giving away shares, it should be something you can't buy with interest.
Yeah. And another point is probably your management team, particularly if you're a younger entrepreneur, you'll have gaps in it, but how are you going to address that?
So how does a one-person business address the management team?
I would say
outsource, seek the appropriate help, coaching.
Seek appropriate help, coaching, join an accelerator program or incubator program. Sometimes you'll meet like-minded spirits there. You could potentially work with them. I think funders are often suspicious, particularly equity funders, if it's things like husband and wife teams. They're not saying they won't work with them, but sometimes husband and wives fall out.
50% divorce rate, I think.
People, sometimes people fall out. If you're working with other family members, you can fall out, and you need really to try and. You won't have all the answers, but if you're bringing a funder in, sometimes they can bring people to the party. They'll certainly bring a non-executive director, either themselves or another individual. they can then potentially suggest people. You can work with. There's lots of good groups that have people who can provide mentors, support. Be like a bit like a sponge. You know, when you're a child, children up to about 7 or 8 years of age are sponges.
Just soak it all in.
It all in.
They hear everything, don't the kids?
Yeah. Any sort of program or opportunity, incubator, accelerator, get yourself on it.
Yeah. Which again, you can't really do work from home if you've got the chance to be. I know most of the banks. You know, Barclays have got the Eagle Labs.
Yeah, NatWest Accelerator.
NatWest Accelerator.
Yeah.
If you get the chance to sit in a floor with 20 other startups. You really will.
Yeah, and a lot of the local authorities will run accelerator programs, a combined authority, and so on and so forth. Yeah. So engage with them and apply and support them. And there are multiple programs operating across the UK.
One thing we get, just as a final comment from my end as well, you mentioned about people falling out. It's quite interesting how many businesses get into difficulty. And often one person is the only one who borrowed the money, and they're like, I can't walk away from this. I'm the one who owes the 20 grand.
Yeah, and that's,
while their business partner just goes, that was fun, I'm off. And you're like, no, hold on.
So there's got to be joint ownership really within the business, and joint commitment and joint acceptance of any liabilities. Yeah. But that goes back to that point at the start about who are you actually working with. Make sure it's someone you feel is going to be there in the difficult times as well as the sunshine times. In
sickness and in health.
Sickness and in health, yeah. If they're going
to run, the business equivalent of
whenever there's a crisis, then they're probably not the partner for you.
Yeah. Good. Listen, Shaun, that's been fantastic. People can reach out to you presumably from LinkedIn, your
LinkedIn,
website.
Through the bank's website. I'll always try to come back to them.
And again, you're not lending anyone any money, so don't get upset with Shaun.
Not lend or invest, and don't get upset with me. I've got no direct influence over anything like that.
We will help signpost.
But I'll try and help signpost,
Yeah. I hope you found that useful. As Shaun said, 50% of businesses will at some point want some money. It's really important to make sure you get that decision right, because it is sometimes one of the biggest things you'll do in business is your first big lend. You've really got to make sure you're comfortable that you've got it all sorted. And the takeaway seemed to be borrow the right amount of money.
Yes, definitely.
Not too little, not too much.
And check that with your advisor.
Both are bad for you.
Check that with your advisor.
And get advice. We can't. we like that. We didn't prime that, but we will sort you out for that. Thanks, Shaun. Hope you enjoyed that episode. As always, give us a like, give us a subscribe. Reach out in the comments. Message us directly if there's any questions at all, either myself or Shaun. We'll gladly help you if we can. Thank you very much.